Have you ever heard someone say, "I made money trading gold," or "I flipped $100 trading Forex," and thought to yourself, how does that even work? Most people think Forex is some complicated, high-risk gamble. But the truth is, when done right, it's a structured and strategic way to grow your money. And in this complete guide, I'm going to break down everything you need to know about Forex trading, what it is, how it works, who trades it, what tools and strategies you'll need, the risks involved, and most importantly, how you can start trading Forex the smart way. Forex stands for foreign exchange. It's the global market where currencies are bought and sold. Think of it like exchanging money when you travel, except online, and at a much larger scale. In Forex, you're always trading one currency against another. For example, when you see euro to US dollar, you're trading the euro against the US dollar. If you think the euro will rise, you buy. If you think it'll fall, you sell. The Forex market runs 24 hours a day, 5 days a week, and it's the most liquid market in the world, with over $7 trillion traded daily. That means big opportunity, but also big responsibility. This market affects everything, from import and export prices to global economics. It's moved by central banks, institutions, and individual traders like us. Forex is always traded in pairs. Like euro to US dollar, euro versus dollar. Pound sterling to Japanese yen, British pound vs Japanese yen. US dollar to Japanese yen, Australian dollar to US dollar, and even gold, XAU USD, which is gold vs dollar. Each pair has two parts, the base currency, that's the first one, and the quote currency, that's the second. You're basically predicting how the base currency performs against the quote currency. Each pair shows two prices, the bid and the ask. The bid is the sell price, the ask is the buy price. The difference between them is called the spread, and that's how brokers make money. We also use tools like take profit, your target for gains, and stop loss, your safety limit to avoid big losses. Lot size decides how big your trade is. You'll use platforms like MetaTrader 4, MetaTrader 5, or TradingView, and you'll need a broker to actually open and close trades for you. The Forex market is huge, and the people in it are diverse. You've got central banks, they set interest rates and influence the money supply. Commercial banks, they move large amounts of currency for global business. Hedge funds, they use high-level strategies and algorithms to profit from price moves. Corporations, they exchange money to pay salaries and suppliers across borders. And then there's us, retail traders, individuals who trade online from phones or computers. Retail trading has exploded because of technology. Anyone can now access the same market that big banks are in. But the difference is in your mindset, your risk control, and your strategy. The most traded currency pairs are euro to US dollar to Japanese yen, pound sterling to US dollar, Australian dollar to US dollar, and US dollar to Canadian dollar. Then you have minor and exotic pairs. And don't forget about metals and indices like XAU USD for gold, XAG USD for silver, and NAS 100, which tracks the Nasdaq index. The Forex market runs 24 hours a day from Monday to Friday, and it's split into major sessions. The Asian session, the London session, the New York session, and the Sydney session. Most movement happens during the London and New York overlap. That's when the big action and opportunity usually happens. To start trading Forex, you'll need a trading platform like MT4, MT5, or TradingView. A broker account, I recommend Duprime. A stable internet connection. A trading journal to track and review your trades. And solid educational resources like FX Orbit. There are two main ways traders analyze the market. Technical analysis, which is based on charts, patterns, indicators, price action, and market structure. You might use breakout strategies, trend-following setups, scalping, or swing trading. Then there's fundamental analysis, based on news, central bank policy, interest rates, economic releases, and political events. You might trade big events like non-farm payroll, inflation data, or central bank speeches. Many traders use a mix of both. At FX Orbit, we love clean technical setups, but we also watch key fundamentals for confirmation and timing. Now, here's the truth. Most traders don't fail because they can't read a chart. They fail because they don't manage risk, and they let emotions take over. Here are a few rules. Never risk more than 1 to 2% of your account on one trade. Always use a stop loss. Don't chase losses or revenge trade. Understand that losing trades are part of the game. Stick to your strategy. Trust your process. Trading is 30% strategy and 70% psychology. If you can control your mindset, you can control your account. Let me save you from the common mistakes that kill beginner traders. Trading with no plan. Using too much leverage. Copying random Telegram signals without understanding. Jumping into trades too late. Ignoring economic news and events. That's why at FX Orbit, we focus on teaching how to trade, not just giving you setups. If you're ready to start smart, here's how. Join our free or premium FX Orbit community. Watch our live breakdowns and learn from them. Trade demo first, master the basics. Use proper money management on every trade. Be patient. Focus on small wins and consistent growth. This is a marathon, not a sprint. I personally use and recommend Do Prime. Here's why. Fast execution speeds. Tight spreads, especially on gold and major pairs. Access to Forex, crypto, and indices. Works on MT4, MT5, and TradingView. Plus, 24/7 multilingual customer support. Now you know what Forex is, how it works, and how to start trading smart. Don't rush. Learn it properly. Stick to your plan. And always remember, your goal isn't to win every trade, it's to be profitable over time. Drop your questions below. Like this video if it helped you. Subscribe for more real content.